Hello traders, I am Stephen Davis, Senior Market Strategist, RJO Futures, here to talk to you about the grain markets today. Corn market, okay, we're at a 30-year high of U.S. corn stockpile, so that is a burdensome supply. And you know, the demand is very good, but the supply is very, very good as well. So I don't really think much is going to happen with the price of corn here as we go into the end of the year. I think of last Monday when soybeans were 28 cents higher and corn traded 2 cents lower, and even the strength in soybeans couldn't jumpstart the price of corn. So our first chart today is a weekly chart of corn. You can see a weekly reversal down. So we've done some technical damage to the corn market this week. My work states corn would trade lower the next 5 to 10 business days. One caveat for corn is 40% of the corn that we grow go to ethanol production. So if crude oil can stay above 50, and we've had a gigantic rally in crude oil this week, if it can stay above 50 and go to 60 and go to $70, that's going to help the price of ethanol, and that's going to help the price of corn. So we'll see about that. The story is soybean. What a story in soybean. It's a time of year for soybean to trade higher and corn to trade lower, and that's what's going on. Our next chart is a weekly chart of soybeans. You can see it's just the opposite. It's trending higher here, and the last 6 of 7 weeks the managed funds have been buying soybeans. So there's really not a fundamental reason for it other than managed funds are looking for yield. And there is a hint of inflation in the air, and inflation's good for commodities. And this means higher interest rates perhaps in a couple weeks in our country. Goldman Sachs, by the way, is recommending more play on commodities here, so hence managed funds buying soybeans. It's a good story. And every night it seems like Malaysia palm oil and or Chinese soybean markets are driving our markets higher. So we'll keep talking about that. The wheat market, Australia's going through harvest, so there's a lot of wheat in the world here. And Egypt, for example, the biggest wheat buyer, they would love to buy U.S. wheat, but our currency is too strong and makes our wheat uncompetitive on the world market. So back to soybeans, that is the big story here. And there's 3 things that could crimp this rally that we've seen in soybeans. Number 1 is South American production. So they're about wrapping up planting soy over there. Keep in mind they don't pollinate till February, so we've got some time to find out about the South American soybean production. Number 2, the U.S. dollar. A strong dollar crimps our exports on soybean and corn. Exports are so important here. And then number 3, trade. And we need China to continue to buy U.S. soybeans. I think they will. And we need countries like Mexico to continue to buy our grains as well. So we'll keep talking about what some of the winners could be in 2017 in commodities. Can it be some of these grain markets? And I'll come up with some ideas on reasons for that. And everybody have a great weekend.